What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is August 25th of 2019. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we've got a few key topics to run through. We're going to take a look at cryptocurrency markets, but talk about whether or not the famed project Libra, founded by Facebook and a conglomeration of other companies, might not even get off the ground due to regulatory pressures, as some have started to state that they might leave the project. And then outside of that as well, in the sense of traditional markets, we've got to talk about how with a slowing economy comes slowing demand for commodities, and yet again, it serves as another domino to weigh down a variety of economies across the world. And I think we're going to find that in oil markets as well as natural gas. We'll take a look at that later on in the video. But real quick, guys, we've got a message from our sponsor, and then after that, we'll dive right into the update. Our sponsor for this episode is Travala.com. Now, for those of you out there who are planning your next trip for either work or leisure, I highly recommend you check out Travala.com to place your next hotel booking. They not only provide a wide range of selections for places to stay along your travels, but also can provide upwards of 15 to 40% in discounts compared to other leading rates on booking websites. And to top it all off, you can use Bitcoin, Litecoin, XRP, and a basket of other cryptocurrencies to place your next booking. So if you want to learn more about Travala.com, check out the link down below in the description to find out more. Alrighty, everyone, so let's go ahead and do a real quick look over the market. As we can see in the last 24 hours, Bitcoin is up almost 3%, and because of that, we have seen an overall trend to the upside across the market outside of a few plays in the altcoin market. However, this is really good to see because we're starting to see a flattening of valuations here. We're continuing to maintain support for Bitcoin on the 100-day moving average, not to mention as well, we've been holding in that wedge, and because of that, market valuations have found steady support here at a higher support range than what we were holding back here in October of 2018. So again, really good to see that, about a year from now, actually I'll use August as a point of reference, pretty much the same price range. Back here in August, we're actually setting a higher price range. So we have escaped a lot of the bloodshed from the last correction, and now we're holding up here at a much better price range for Bitcoin and cryptocurrencies abroad. Now, if we take a look here again at market dominance, this is what's giving me a sign that there might be some risk taking soon. Other coins setting higher lows here, starting to stay flat. Again, nothing too serious, no serious trend shift just yet. But again, Bitcoin showing the opposite here, starting to flatten out here and looking like it might start ticking downward in dominance. Now, again, the break point for me that would really get me interested is if we close below 66% market dominance. Good percentage point from the previous, actually almost 2 percentage points down from the low that we had here back on August 14th in Bitcoin dominance. So again, I want to see a sharp, huge drop of 2 or 3% here from where we're at the moment to really signal that, hey, risk taking is coming back into the market. And if we take a turn towards history, as I've talked about, we would expect that when Bitcoin goes to 20K. But who knows? Might be a little bit earlier, might be a little bit later. Some people have hinted to that it's going to come when people don't predict it. Who knows? Now, I want to let you all know real quick, just to share with you guys, I'm going to be at 3 upcoming conferences, at least as of now. It always tends that I usually probably do 1 or 2 more than I plan, but I really do love going to meet you guys in person. So I've got 3 conferences I'm coming up to. I'm going to the Delta Summit in October from the 2nd to the 4th. This is in Malta, so if you guys can make it, link is down below for that, as well as with the discount code for all these conferences, guys. And then also the Litecoin Summit. This is going to be in Las Vegas. Never been there before. It's going to be fun. I already do enough gambling as is, though, with the cryptocurrency market. I'm just kidding. But yeah, you guys, I would love to see you guys here if you happen to be coming to the conference or you're going to be around the area for Vegas. And then also for the CoinMarketCap conference, I'm going to be attending this in action, not only attending, but also help to moderate their live stream and cover the conference as they're there. So if you guys can't make it, you can always watch it on CoinMarketCap.com. That's where it's going to be broadcasted. And you're also welcome to join me in Singapore where the conference is held. So I'd love to see you guys there. All right, just want to let you all know about where I'm going to be at the time being during the next few months. Can't wait to do a little bit of traveling. It's been a while. I'm mostly homebound right now, working on a few different things, making up content for you guys. But I want to go ahead and take a look at the market here. Not much has changed in the sense of price. We're still coiling in here, as we've talked about. You guys know I love wedges here where we have rising lows and lowering highs. And again, we're expecting some form of a breakout here in the next few days to pick up direction in the market going into September. And quite frankly, I think it's likely that it's going to be to the upside. Now, if we take a look at the bearish case scenario, you'd really have to take a look at the logarithmic chart that we take a look at from time to time. It's the one that I usually have up on TradingView, where sometimes, usually in each cycle we come back down and we're testing on the bottom line to support the bottom parabolic line of the logarithmic chart. And that would point us towards going down to somewhere like 6 or 7K if it's to happen quite soon. I really don't know if we can get there though, guys. As much as I think that would be a very rational thing to do, especially considering that was where previous support was. And again, many people think that we need to come down and test that again. Quite frankly, the momentum in this market and the macro environment right now, I do not believe is going to allow for that. The upcoming institutional interest as well is really going to be another big piece of buy-side pressure. And I think it's going to come in conjunction. I think we've already started to see that this year with Bitcoin being the best performing asset. So I just want to make it clear, guys, I'm not going to be waiting around for that. If it happens that, we get it down to 6,000, heck yeah, I'm going to average in if I have some cash at the time. But I don't really care. Even paying a premium of $4,000 from 6,000 is a better bet in my mind, for me personally, in the next cycle for where I think Bitcoin's going. The risk of waiting for it to go down to 6K and having all my cash on the side and then seeing Bitcoin possibly go to $40, $50, $100,000 per Bitcoin, it's not worth it to me, right? It's just, I don't play markets like that. I much rather would try to trade on the trend, and the trend right now is showing that this thing is picking up steam, and it's picking up steam fast. And luckily, we've had a little sideways period here in markets where we haven't had to, stress too much. We've had some time to at least build a position. And the broader market as well. If we just take a look at the asset sheet here, guys, again, as I've shown you guys over the last few hours, markets are starting to really kind of pick up the tone of Bitcoin. We're seeing altcoins not losing any more dominance. If Bitcoin's going down, altcoins are going down. If Bitcoin's going up, most altcoins are keeping up at a pretty similar pace that Bitcoin is, sometimes outpacing Bitcoin. So again, we'll have to see if we see any really big trend shift. But I want to spend some time to talk about something that even myself, many others including myself, were honestly, at least we try to see the positive light of it in this case. I think Libra, which is going to be our topic of discussion here, has some potential behind it. As much as I don't see Libra as a cryptocurrency, I made that very clear in my Libra video. At the same time, guys, I've said this before. A lot of people talk about, blockchain in the case of projects like XRP and Ripple as being an improvement to the traditional system. And you know what? Quite frankly, if you can build a better technology than Swift or other payment gateways that remove the excuse of banks to charge you $30, $50 for money transfer, yeah, I'm pretty much for it. If it means that people who are going to be wiring money to their family overseas for remittance payments or whatever it may be, any kind of money transfer, where it's not going to eat up 30% of the money that you send over, and in that case, it could just be something like $100 you're sending your family, so they only get 70. Yeah, I would really like to see those inefficiencies removed. And if Libra can do that, which is what it seems to be trying to do, and also broadening access to financial services, even though Libra's project doesn't have any plans for that really right now in the sense of credit expansion, things of that sort, I'm all for innovation. But here's the big problem with Libra, and we talked about it in my previous video. I specifically stated Libra is not a cryptocurrency because it's created in a permissioned way. There are permissioned actors who reach consensus over the network. It is permissioned in the sense that the network itself, the coins or the tokens, the Libra tokens on the network, are backed by world reserve currencies and treasury notes, so things that are supposed to give it its value. So you have trusted actors in that case who have to manage those assets, and we have to trust that those assets are backing the generated Libra and that there's not fractional reserves of Libra, right? All these things make Libra a non-cryptocurrency. It is not a cryptocurrency at all. The reason being is that if we take something like Bitcoin was created in a permissionless nature. It was created open source. We don't know who created it. There is no figure entity. They don't own intellectual property over Bitcoin. It is open to the public. You can fork it, change it however you'd like. But the Bitcoin network as well is reached in a decentralized and permissionless nature by miners on the network. Its economic model makes it so that there really is no way for governments to quote unquote regulate it, to stop it. It is decentralized, it's distributed. It's very difficult to shut down a network as powerful as Bitcoin. And because of that, even if regulators had a choice, they tend to stay out of it. They tend not to interfere with it because the more they interfere with it, they know, as they've seen with things like torrenting and other decentralized peer-to-peer technologies, is that it only scales and it only gets worse. They're better off creating another solution. And I think that's what the FedCoin's doing. So anyways, I went down a little bit of a tangent here, guys. I apologize. I just realized that. to explain the story of why we're talking about Libra losing traction, it has to do with the fact that as of recent, there has been a report from the Financial Times that 3 unnamed backers of the Libra Association are having second thoughts about the project. Regulators around the world have been vocal in their critiques of Libra, raising concerns over the power Facebook could have on a new global currency and the threat to global financial stability. So if you read through the story, we're starting to see companies who are part of the Libra Association. We don't know exactly who, but we have people who are backing as a part of that inner circle of companies, potentially pulling out of the Libra Association due to the concern of regulations. And quite frankly, it makes sense to me, guys, that a lot of these companies would be worried about that, because if they can't win over the regulators, if they can't lobby hard enough, if they can't get the power that they need to push through legislation that protects Libra, they could be involved in something that governments, see as an absolute threat to their national currency or to the regulation of the financial system. And someone put a really good quote in. I don't know if it was in this article or the second one that I have up here. That it was basically a quote from someone. I think it was a part of the project or part of the overall Libra Association. They basically stated that they should have talked to regulators beforehand. They shouldn't have just come out out of nowhere. And sure, there was rumors for a while, but you should sit down with regulators, much like most crypto ICOs do, and talk about what you're trying to build. Because in many cases, I don't think the regulator's really that bad in some of these jurisdictions and stuff. They'll actually sit down and actually talk to you about things. But the thing about it is, unless you're building something like Bitcoin that is completely censorship resistant and permissionless and open source, and you're building something that isn't a permission nature, it is going to have trusted actors, and is going to be supposedly backed by a reserve of national currencies, heck yeah, you're going to have to sit down with regulators. Sorry. The only people I really feel sorry for in this case are those who have been building on Libra and haven't been told that these are some of the risks that are involved with Libra right now. The fact that there are centralized factors, which means they're going to have to appeal to regulators. And I've talked about that ever since the beginning of Libra, guys. Again, I see potential behind it. I think it's one of the most promising financial projects of our time. But I don't believe that it's going to last. It is a 1 in 5 chance that they're going to actually build a product that succeeds in the long term or can scale to what Libra really wants, unless they actually take the time to lobby and push policy. Now, I bet we would all agree that's probably not the right thing to do, but that's the world we live in. And that's probably what Facebook is going to do with the power of money that it makes, as well as the other corporate entities that are joining on board. We will have to see in due time. I much rather would support cryptocurrencies and people becoming their own bank and having money in their pockets that isn't controlled by nation states. Sounds like a pretty good deal to me. All right. So speaking about distrust in traditional centralized systems, here on investing.com, we can see that the futures across the board on Friday were absolutely bloody. Absolute bloodshed across the board. The United States leading the way. We had a huge mix of uncertainty starting to kick in the market. Comments from the Fed. I think China retaliating with more tariffs. The United States and President Trump making comments as well that only accelerated the confusion and the worry around this trade war. And you can see here just how sharply equity started to drop. Right? See here on the chart, we're back down in the range we were back here in the mid part of August. Not too far away as well from where we were back here at the beginning of August. And the overall chart here, we're taking a look at the Russell 2000 here, doesn't look very good. We're taking a look at the logarithmic chart just to kind of put some scale here. But I think we've got a long way to go, guys. Take a look at the S&P 500. I want you to just kind of look at the chart. And I don't actually have much indicators on here. I've closed off my drawings of the chart. I even turn off the 9-month here, which I think is a good indicator sometimes for market crosses when you're taking a look at large time frames like the monthly. Just take a look at the chart here. We can even put it on logarithmic if you guys would like. It looks like it's about time for a pullback. We've been on a very long expansion without any serious correction in the market. No 40-50% pullback. And there's a lot of signs that give me that signal of confidence. The reason I had the Russell 2000 up, small caps usually are outperforming the market. And we've seen where the NASDAQ and, for example, the Dow Jones, S&P 500 have all either broken out to new highs this year and then corrected back down, or tested relatively towards their 2008 highs. Small caps can't even make it back up. People are averting risk. It's a risk-off period of time. And that's an early warning sign of recessions, because when people are cutting back on risk, when there's less stimulation in the economy through monetary policy and global fears of the fundamentals start to step in, that's the signs that a recession is coming soon. 6, 12 months max. We might be in the thick of it right now. At least the global economy is sending signals of this. And right now, just in the last, trading day back here, we were seeing futures already starting to trade. And Middle Eastern stocks right now are on the slide. We're starting to see some serious worry, because if there's a slowdown in manufacturing and global trade between China and the United States, it doesn't just hit China and the United States. No, those aren't the only two parties involved. Everything's interconnected. It sets a huge precedent for oil markets. Saudi Arabia being a pretty large exporter alongside other OPEC nations. And we've already got a big issue right now. This is something that I've talked about a little bit in the newsletter. I don't talk about too much on the channel because I know you guys don't like me doing too much on traditional markets. But there's been this topic of the oil surplus that has been existent in 2018 and 2019. We had about 3 quarters where there was an actual deficit in the global oil production back here in 2017. But ever since then, we've seen a huge spike up. And I can tell you, it's actually not just OPEC. Who do you think is the producer? It's the United States. We have become a major producer of oil and natural gas in the global stage. And crazy enough, even though we've got this surplus back in action, oil prices have actually still remained quite high, around $53. But it doesn't look like it's going to be able to do that for that long. We are getting to a point where there are now more abundant and cheaper ways to produce oil and natural gas. Technologies are improving in the space, and we're finding ways to tap into reserves that we weren't able to tap into before. Not to mention, we found huge reserves in the United States that we didn't think existed of natural gas and oil. Pretty much, I think there was a report that came out that stated it was like an increase of 50 or 100% on top of the reserves that we thought we had in the United States. I think it was somewhere down in Texas. So we've got these huge fluctuations and increases of our previous expectations of what was available to us. And now, I think we're getting to a point where finally, even though we kind of avoided it back here in October and November of 2018, where I thought it was going to fall through, where we're finally going to roll back down and actually set a third set of new lows here on the downtrend line here, around $20 a barrel. And factoring in inflation, that is some of the cheapest levels we've seen oil. And there's 2 reasons for this. Slowing economy, I would say 3 reasons here why I think oil could do this. Slowing economy, slowing demand. You have the same amount of supply, if not more. If it outweighs the demand in this case, the growth in supply, then prices go down. Second thing as well, you've got a huge push here for production in the United States and overall in the world. So we're starting to see, again, this increase in supply here. So we already talked about that. But the third thing that a lot of people don't factor in is that over the next decade, this is not something that's going to happen overnight. That's a big misconception people have. But over the next decade or two, there's going to be a slumping demand for oil as people move to EVs and other types of vehicles across the board. No matter if you're a big fan of it or not, it's the trend right now. All the auto manufacturers are switching to EVs right now. That's just the trend right now. See how well Tesla performed in the last year in the sense of its manufacturing capabilities, and look what the other automakers are doing. In the next 2 to 3 years, everything they're going to be selling, or at least the majority of their products, are going to be pushing towards EVs for commercial for like everyday consumer vehicles in this case, not like trucks, things of that sort. So you're starting to see a huge shift. A lot of the newer models will switch into this. And I think it's going to have a huge global dent on oil consumption. If we really look at where the demand is coming from and what those users are going to start driving in the next few years, I think it's going to shift oil markets down to ranges that we haven't seen since back in the 90s. The days of $100 oil, I think, are completely gone. I don't think we have any reason to expect oil to go back to $100. There's no reason for it. The overall amount of supply right now that's available is just too abundant right now. It's completely blown away the expectations of peak oil theory. The world provides abundance, and funny enough, even though we have this abundance of oil, I don't think it's going to become relevant. And now there's one other thing I want to show you guys in the sense of this talk about commodities, because I don't do it often, is natural gas. Take a look at natural gas right here, guys. This thing has been on a massive slump since it hit $4.80 back here in November of 2018. Month after month, slow decline here. And I actually have this drawing on my newsletter. I've got the wrong moving average on here. We can change this to the 50 month so you guys can see what I mean. Take a look at this. Every time we broke through the 50 month, we have a multi-month decline for natural gas. And right now it's looking like natural gas, and this actually completely makes sense to me because of the overall production that's coming out of the United States and the countries. Someone's eventually going to be pressured to cut because it's going to be too unprofitable to produce. But nat gas looks like it's going to $1.20. That's at least what the trend line shows us. It's been true 3 times in the past. Who's to say that it might not be true the 4th? Either way, I mean, this is just looking like there's an overabundance in commodity markets right now. Commodities are extremely cheap. So when there's not much of an attraction to these commodity classes, people look to put their money elsewhere. Think about hedges like gold and silver. Think about new emerging commodity classes in a sense, or asset classes like cryptocurrencies. There's not many good places to park your capital. And I think that's why we've seen the rally we've seen in gold over the last few months. It's the reason we've seen the rally in silver. Now breaking out of the descending parabolic line above the 50-month here. And also in Bitcoin. I think this has got a lot of potential, guys. I think we've got a lot of interesting price momentum to see over the next few months. But time will have to tell. I know where I've got my exposure to, and you guys will have to decide for yourselves what is the best place to park your capital and invest in. Anyways, guys, that's it for the video. Thank you all so much for watching. Hope you all enjoyed a little bit of diving into macro topics and diving into commodity markets and talking about some other dominoes in the global economy that we're keeping an eye on. Again, it's not to be fearful of these things, but at the same time to understand that any combination of 2 or 3 of these things can really have a weight on the economy, and then can kickstart other fundamental flaws in the economy towards weighing in and sparking a full-scale recession. That's the whole idea here, guys. It's not that everything is a doomsday scenario and that it's going to happen tomorrow, but these are things we need to really consider over the next few months. At least I think so. But you'll have to determine that for yourself, guys. Hope you all are having a wonderful weekend wherever you are. And I'll see you guys bright and early tomorrow on Monday, starting off the week. Hope you guys are having a great day wherever you are. And I'll see you all in the next one. Stay tuned.